Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
Welcome to Markets Now. I'm Michelle Rowe with Tommy Grisafi of Nesvick Trading Company. And we are seeing on the close today higher livestock futures, grains ended mixed with corn down to new contract lows. Soybeans were higher. And Tommy, let's talk about soybeans first. Was that just a short covering bounce today? I mean, we had so many days there where we were lower.
Yeah, little profit taking action here in soybeans. Little hot and dry weather. We'll see how this weather turns out for August, but you have to be cautious. I'm old enough to remember some record corn crops, and then the spigot stops. The heat turns on. Those last 2 weeks of August and those first 2 weeks of September, even there's times we go out in the Pro Farmer Crop Tour and soybeans look good, and it stops raining, and those beans shrink and moisture drops and everything else. I remember last year, a bunch of farmers. Remember, Michelle, when farmers were harvesting soybeans that had very little moisture that took away from that final yield, and that was reflected in the market. So we got to keep an eye on August weather. So important. Hoping for demand. We have some demand, but the demand I'm talking about, where are the China sales? If we don't see China come in here for OND, we're going to have a serious problem here as it comes into harvest. As you and I both know, farmers so often use soybeans to cash flow here. That is the crop that tends to go right to the market. They forward price them. They go right to the trains in the export market. We may not have that export slot filled up here in time by November.
Okay, so you bring up a good point. This isn't just about supply. This is about demand. If we do not get China back into this market here before harvest, how low could soybean prices go?
Well, there's two parts we have to talk about, and that's a great question. We could talk about the futures and the spreads and everything else. I'd like to talk about the cash market, and the cash market I'm familiar with. That's up in North Dakota. I did look today at Alton Grain Terminal. There's other big elevator systems, Arthur Co. There's so many. There's a crushing plant now. Look at those cash markets. We're looking at $1, $1.10, $1.20 basis. That's the price under the futures. So we have what we do, what I sit in front of these computers do all day. That's your futures, your options, your spreads. But the farmer, my clients in North Dakota, I did notice some cash soybeans with an 880, 890 bid. And Michelle, those numbers just don't work for anyone. And so we could talk about how low can futures go. My bigger question is, how wide could that basis get if we end up having a great crop here and no one to buy it right when we need them to buy them? And they know that. They usually say, we're going to come in right then and swoop it up. They haven't been swooping anything. So we need to see some swoop, and we're running out of time, Michelle.
Yeah, no doubt. And then you did see those cash bids go directly to the November contract. That tells me they don't need beans right now, right?
Yeah, that's the old kick the chair out from the farmer, where if you hold grain long enough, you're going to, get the birthday hat out, because we see it happen in wheat and corn and other markets, but soybeans starting to have a birthday. And even though you didn't think, you're like, hey, we have August, we have September. If the end user wants to switch those bids to no, that means they are forward enough bought. They're not out of position. The export market's quiet. And if they needed it, they would stay bidding aggressively. Now, do they quote it off November in the center of the country? Do you see that basis improve? We'll see. But, you'd still like to be bidding off the SEP and have a really positive cash market. And that's just not happening here in soybeans.
All right, the corn market hit new contract lows here today. Tommy, how much lower do we have to go? And are we just trying to price in this big yield?
Well, we are arguing about how big the crop is. That's not my to-do list, to get on the internet and argue. And there have been some things, that happened in D.C. today with this farmers market, and the American farmers out there in the internet saying, we're right here. You don't need a farmers market in D.C. We need someone to buy our products in central Iowa and central North Dakota, wherever you are. And so you're seeing a little anger there. How low could the market go? Again, I'm going to refer this cash versus futures. Could we have another 20 or 30 cents lower in corn? Absolutely. Could we flush and go 50 lower? That would be a big push. 360 D's corn would be a big push. It's going to be hard to get the ball down that low. But what we can do, again, referencing North Dakota cash prices, I see some elevator systems in North Dakota 80 under for cash corn delivery. So if you have a $4 D's corn board, it's not a good price, Michelle. We're talking 340, 350, 360 cash corn, where you have a poor basis. decent basis, maybe 375 corn, but the world's not running out of corn. But what's amazing is the exports we have and the shipments. I mean, if you look at one set of numbers, it looks like business is good in the corn market, Michelle.
Absolutely. How much old crop corn do you think we need to move before harvest? Is there a lot?
Well, the spreads say that we're not running out and that supplies are not tight. So when you see September corn futures trading 20 under D's, it's saying there's plenty of corn out there.
So for producers that might have some old crop corn left, do they market now? What do they do?
It's kind of like going to church and confessing your sins. You're going to have to confess your sins on this one, or you can wait to confess your sins and turn that old crop into new crop, pick up 20, 30 cents through carry. But it's not free to store corn, Michelle, as you know. Depending on what space you have, there's better asset classes out there. Just take the S&P 500, having a big update. There's better places to put your money than storing a depreciating asset like corn.
Let's talk about the wheat market. We've been unable to really put a bottom in that market and down, mostly lower today, even though we had a lower dollar. Is wheat not able to bottom because corn keeps going down, or what's the problem?
I thought wheat would have a better day. We'd noticed that Russia had struck Ukraine again over the weekend. Things are not calming down over there. The president's put out several true socials saying he's not happy with Russia. Things actually feel like they're heating up in the Ukraine, and yet there must be plenty of wheat in the world. Wheat was starting to have a good day today, couldn't hold on to those gains, and I'm sure wheat looks over at corn and says, "Wow, corn was up 2, now it's down 3. Why are we up?" But I got to tell you, of all the markets I trade, the grains are the least fun right now.
So stock market rebounded on Monday. We got rid of maybe some of those tariff fears, but talk about the impact money flow is having on the commodity sector, especially grains.
Well, let's look at the dollar. We started to move a little bit more to a stronger dollar. The dollar's starting to go back towards par. We spent some time down there at 97. There's some people think the dollar can go up to 107, 108. That would definitely put some pressure on commodities. So if I'm talking about putting pressure on commodities, you think you're going to look over and gold's going to be down a bunch. Gold was up 40 today. Some of the commodities are still shining. And when you talk about that spec money, there's a lot better things to be involved in than the grain. So you look at gold or silver, crude oil is not real popular right now. Over the weekend, OPEC said that they're going to pump more. That's putting pressure on crude. But it would be horrible to be an investor and not have some Dow Jones, S&P, NASDAQ tech type stocks in your portfolio. You talk about having a portfolio and money management, it's fair and balanced. And people lean a lot heavier towards stocks and bonds than they do in commodities. Now, if we felt inflation was roaring its ugly head, you might see some buying in commodities. But I think the president and the tariffs are doing, for as much as tariffs could have an inflationary effect, I think in this case, we're just not seeing those big type of inflation numbers hit. That's giving people the green light to go ahead and buy stocks again.
Any advice from a marketing standpoint, just because everybody has gotten so bearish here?
Start looking at the carry. The more we get bearish in the front, the more they'll reward you for your ability to store and hold it. Understand what bushels you can't store. We're coming to the point of year, regardless of what brokers have told you, analysts, what your gut feeling, your weatherman, weather woman, all those things. You are going to have to market and prepare for what grain you can't store. So the most important bushels to prepare for are the ones you can't store. Also, just to note, great time of year to call your crop insurance agent and say, hey, if we keep going down based off the insurance I bought, how do those numbers look versus the yield you think you're going to have? So prepare for what bushels you know have to go to town. Call the crop insurance agency and buckle up. Could be a wild harvest here.
Tommy, we did have record cash cattle trade last week, which kind of fueled the fire here for the rally that we're seeing in the cattle market. Can we go back up and retest the highs, do you think?
Yeah, absolutely. Not too far. July 31st threw us a curveball. Last day of the month, we had that big down day. Even a couple of the futures contracts touch limit, and we have new extended limits. But this market is so high. The fact that we could break $8 and put on $3 a couple days in a row and be right back towards contract highs. Yeah, the air is getting thinner. Warning. The air is getting thinner the higher we go up. So seatbelts again. This is a wild one. This is not the type of market you can go on vacation and check a week later where it is. This type of market, you can go to the washroom, and this thing could be at a totally different price. So be careful, folks. Understand your risk, futures, options, LRP. Just understand when you want to lay off risk, how and when to do it, and quickly.
All right. Thanks so much for joining us. Tommy Grisafi with Nesvick Trading Company. That is Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.